Eric Muathe for the week end of March 22nd and March 23rd, 2014. Let's take a look at how we closed on Friday. The Dow was down slightly, 0.17. The Nasdaq was down about 1%. S&P 500 was down about 0.29. Gold was unchanged. Crude oil was slightly up. And we see that the VIX was up 3.31% in what was the conclusion of an options expiration week. So let's see how the markets did overall for the week. And we see that the Dow was up 1.5% for the week. The Nasdaq, or the S&P 500, was up 1.37, and the Nasdaq was up about 0.74% for the week. So it was a positive week net for the entire general market, at least as far as the US markets are concerned. Now, before I begin with the video analysis, I want to take a look at something here, and it is a concept I call uniformity. And what this basically is, if you take a look at the RSI, and let's say there is a line on the RSI like that, and this line is connecting the highs on the RSI like that. If you ever get an instance where you move above the line and back below this line in uniform action, if this is uniform, this movement above the line and back below it here, if this is uniform like that and back to the line, then this is what I call uniformity right here. And it tends to be a reversal signal, and I'm going to be talking about that. So this little explanation here is going to help you understand what I'm talking about when I talk about uniformity. And it is just a reversal pattern. So uniform action above a line and back below it, and you can have various ways of this uniformity concept, but I'll show you one that is telling me on an hour-to-hour basis. More than likely, we are looking at a market that is wants to and could possibly sell off, unless, and this is unless we break out above the top lines on the hourly charts for the major averages. So let's begin with taking a look at the Nasdaq here, and this is the Nasdaq 1.5 year daily chart. And we are looking at a market that is holding steady and very well above this previous buy point of 42.43. So the market is healthy, holding above that level. That's good. It's also holding above the it's also holding above the 50-day moving average, which is very healthy. Now, what is interesting is if we take a look at support levels coming from the daily RSI, we draw a straight line like that. And you can see like this is an area of uniformity here, because we made a W up, down, as uniform action. And once we broke out here, which was this entry point here, we had a nice move. So this line has been very good in telling us when to get long this market. It was support previously here, which was this entry point, was support previously here, which was this entry point here. And so now we see that we recently bounced off that line here on the daily, which was this low here. So what I'm wondering now is the possibility, and it's just a possibility, that looks like we are at 50.30, which means if we slash below this line and below 50 on a daily basis, we might get a serious one-day sell-off. And that could be anytime next week if we slash below 50 and also break this very important trend line on the daily for the Nasdaq. Now let's take a look at the Nasdaq from a hourly chart, and what we are looking at here is, take a look at what happened on Friday. We had this here, we tried to move higher on an hourly basis there, which was rejected. So that was fake. That was all options expiration. And so we came back to the channel, and we also seem to have closed the day below this wedge. So this wedge, we can argue that is broken for now. Short-term wedge broken. So, this could open the possibility for lower prices. That break could be material, could not be material. It all depends on how you want to look at it. I also see the possibility of a back test here, which was a sell signal. If you take this line and draw it like that, and you can see that ever since we broke down, and ever since we broke down here, we've come all the way back and under tested the blue line, failed and coiled lower. So that makes sense from that standpoint. And also if you take a look at the hourly RSI top line like that, you'll see that this here, we bounced off this line twice and back below it. That to me is uniform action, hence uniformity, and that is why over the last 2-3 days I was expecting a pullback in the market, and we've seen that pullback mostly on the Nasdaq, but not on the Dow and not on the S&P 500 for now. Also, if you take a look at the MACDs, you'll notice that we closed Friday with the MACDs for the Dow on an hourly basis, both trending very close to zero, if not at zero. And when these are both trading below zero, the MACD tells us that momentum has changed directions, and now the momentum is more biased to the downside. If we take a look at the 30-minute chart for the Nasdaq, we see again this idea that we tried to, this here was fake, and this was options expiration there, that blip there, and then back below the channel, which makes a lot of sense that we saw a pullback towards the close. Now if we take a look at the Dow Weekly, now the Dow is encouraging just because it ended Friday back above the 10-week moving average, so that's healthy. And we see that it still remains above this weekly support trend line here on an RSI, so that is still holding. So you know, it still continues to be healthy. Now you'd be worried if it ever breaks that line, but for now it's trading above that line, so I would say the Dow is looking healthy. Okay, take a look at the Dow Daily, and now we start seeing some problems here. Because remember, the Dow never went back to the highs of 2013. Okay, so the Dow never broke out, and we start seeing signs of a declining top line here. If we take the highs, if we take the intraday high there and this closing daily high, we see that this is now turning into resistance right there. I hope that's not confusing. Right there, it's turning into resistance. And also you'll see that the back test of this red line here, so this one to me was a sell signal there, because that was a back test of that line. And more than likely, if we don't hold the 50-day moving average, if we don't hold the 50, that could really mean that now we are really, after failing to break out, probably setting to go lower. Anything above the 50, you know, you can say that is a market that is healthy, but I personally seeing reason why this market could stall. If you take a look at the Dow from an hourly basis, draw a straight line connecting the hour-to-hour closing highs going back to December of 2013, and this daily hourly closing high here, draw a straight line, you see that resistance came precisely on that line there on Friday. Also happens to be where you find resistance if you take a look at this here, which is this line connecting the top lines on an RSI hourly. So that makes sense that resistance came in late Friday, and hence the slight pullback into the close. If you take a look at the Dow 30-minute chart, and you see here this has turned into resistance, this level here turned into resistance before here and now again there, which makes sense. And you see the top lines on the hourly on the 30-minute chart, and you can see that this is perfect uniformity here, above the line and back below it, which is uniform action. That tends to be a trap, and this was a trap, hence the reason why I thought there was going to be a pullback here towards the close, or at least at some point Friday or Monday or Tuesday. And also you see that now we are back below zero here, very close to crossover, and back below zero, which would suggest increased momentum to the downside. Let's take a look at the Dow Transports, and we're going to take a look at the daily. Now the Dow Transports on the daily, notice that here this breakout seems to be stalling. Okay, we also made a higher high, on the daily for the Dow transports, and yet this line that connects the highs on the daily RSI was rejected a couple of days ago, if not a week or so ago here. So this high has been confirmed with the RSI negative divergence. So this negative divergence more than likely suggests that this is going to be either the top, because this negative divergence, while we are making higher highs, this is either going to be confirmed resistance and a market that is going to have to pull back, or eventually we have to break out to begin another move to the upside. Now, why do we have to break out? Because take a look at this breakout here. This breakout, which is this area here, began because we broke out here. So there was a breakout on the RSI here, which also coincided with that breakout. So you need a breakout on the RSI if this market is going to take off. Right now, what we are looking at here is a market that is showing resistance, and we are not seeing any breakout. So we are going to take the resistance, which is what we see. And so the thinking here is more than likely we are going to get a pullback in the general market in the coming days. Let's take a look at the S&P 500 weekly, and we see that now we are back above 1842.37, which is healthy. So back above 1842.37 is healthy. Also seems to be holding above this support line here. This RSI weekly support line has been holding this market together. Recently, towards the end of 2013, there was support there, which was somewhere around this support here, and there was support here early this year, which was this support there, and we see we are bouncing off that line again, which is showing support there. So anything above 1842, which is the highest for 2013 on a weekly basis, and anything back above the 10-week moving average suggests a healthy weekly chart for the S&P 500. Now let's take a look at the S&P 500 daily, and we start seeing problems here because early on in the day, Friday, we were at all-time highs or very close to all-time highs, but yet we still continue having these declining technicals here. In fact, even lower lows on the technicals. So my thinking here is more than likely this could be an area of either reversal, because if you take a look at this back test, this line here, ever since we stalled, this has been, you sell at that line. When it breaks below it, you buy back above the line, which is this general area here, sell it when it goes below the blue line, which is what we've done over the last couple of weeks. So this here could be a trap. My thinking here is, if I am forced to pick one direction, is more than likely lower. S&P 500 hourly chart, and you see perfect uniformity here, as you can see the top lines on the RSI on an hourly basis, and then we have this action above the blue line and back below, which is uniformity. So this was always going to be a sell. And then more importantly, from a breakout standpoint, this breakout here as of right now has failed on this hourly chart. So that's a failed breakout. It was also an area, and I'm talking about this general area, was also an area of a back test, which is this level here, this line. It's a back test because we broke down here. We've come back, hit this line once here, came back, hit the line again. If that doesn't hold, more than likely we get a pullback. Okay, now on this chart I want to show you how uniformity works, because you can see that we had a breakout on the RSI here. Okay, in February we broke out above this declining top line here. That was a buy, which is this general area here, which is, on hindsight, was a very successful move. So what we do, we draw a straight line from the buy point here, which is this level here, like that. And you can see every time we bounce off that line, we did here beginning of March, nice entry point. We had a move, a W here, back, up, up, down, which is uniform action. So this move back above that line, which is here, was also short-term entry point. So what I'm saying is this can tell us entry points and exit points in a market short term. Right now we are seeing a sell point. So to me, the thinking here is more than likely a continuation of the pullback. If you take a look at the S&P 500 30-minute chart, you see failed breakouts here, which is not good, not a good sign. Failed breakout there. There was a back test of this line here, right there, which was this general area, which was rejected. Makes sense. Take the top lines on the RSI on a 30-minute chart, and you can see this has turned into resistance because this was a higher high on a 30-minute chart. The fact that the RSI made a lower low and the fact that the RSI was trading around 61.8, that suggests that this is more than likely a serious sell signal. Now let's take a look at the Qqq Daily. And you can see on the Qqq Daily, take you back to these higher highs throughout 2014, higher highs, and yet lower lows on the technicals. Okay, so more than likely the Qqq is telling us this market is going to eventually have to pull back seriously, because this blue line here was support previously, going back to the entire 2013 area, but now seems to me that this blue line has turned into resistance right there. Hope you can see that this right here has turned into resistance because the Qqq is not trading above the blue line. Once it was throughout 2013, it was trading above the blue line, like this was a nice support, which was this nice entry point and a very nice run. It was eventually recaptured here, back above that blue line, which was a nice entry point somewhere here. And you can see now this has turned into resistance. So my thinking here for now is more than likely we are looking at a market that is getting tired and could eventually have a serious major pullback. Let's take a look at the Russell 2000 on a daily chart. And the Russell 2000 is going to show here again these top lines here on a daily has been resistance. Most recently, about 2 weeks ago, was resistance there, which makes sense. And also notice that the top lines on the RSI there gave you uniformity sell signal right there. So that is where you wanted to go short, because that was a top on the RSI, which is sentiment, a measure of sentiment. My thinking is unless we can break out, if we don't break out, we probably see a pullback. On the other hand, if we successfully break out, then if we break out here, then we are going to see an explosion to the upside. I always try and conclude my weekend videos with a look at Apple, and let's take a look at it again. Nothing really much has changed. It was up about 1.5%. We still continue seeing these top lines here and the bottom of this wedge forming, and we haven't resolved one way or the other. So this stock is, for all intents and purposes, in no man's land and should continue trading within the wedge for now until either it breaks out or it breaks down. It's very simple there. And also we take a look at the daily. Same situation, trading around the 50-day moving average and within that wedge there, and also that wedge. So that wedge is very obvious to most of the traders, and one way or the other we are going to get a breakout or a pullback above this wedge, which is also shown on the daily RSI. We take a look at the hourly here, and same situation. You can see there's a wedge formation forming on this stock. So one way we are going to get a breakout or we're going to get a breakdown. The one thing, if I take a look at the long-term monthly view, which is what I shared with you a couple of months ago, is this line here has been very telling on which way to be long or short. You can see the last time we broke down here was in 2000, before the bear market crash. There we broke down here, which was in 2008, which was before this major pullback, and you can see recently we stalled precisely at that line. So my thinking is, in a long-term basis, unless we can break out above 550, so unless we break out above 550, if we go on to break down below 500, which is the lowest monthly close this year, if we break down below 500, we are going to see an accelerated move lower for this stock. So my thinking is, right now we are neutral. with the possibility of resolution to the downside unless we can break out above 550. So that concludes the free part of this video. For subscribers, let's continue on with the rest of the video. For the rest of the guys, have a great weekend, and we shall see you during next week's market analysis video.